More than 50 million Americans hold some form of cryptocurrency. This digitalization of financial services is not a trend. It is a transformation. Here at the Office of the Comptroller of the Currency, we've confirmed that national banks and federal savings associations may engage in certain cryptocurrency activities responsibly in order to serve their customers. OCC-regulated banks may provide custody services, including the safekeeping and secure storage of cryptocurrencies and other digital assets, all on behalf of their customers. The banks we supervise also may buy and sell cryptocurrencies they hold in custody at their customers' direction. Additionally, these banks may provide other custody services, including record keeping, tax, or reporting services for their customers. OCC banks may use a sub-custodian to provide the same services, subject to appropriate third-party risk management practices. While a range of cryptocurrency and digital asset activities may be performed by banks and their third parties, I want to be clear that the OCC expects these activities to be conducted in a safe and sound manner and in compliance with applicable law. To learn more, please visit occ.gov.
Happy Bitcoin Monday, freaks. It's your host, Odell, here for another Citadel Dispatch, the interactive live show focused on actionable Bitcoin and freedom tech discussion. As always, Dispatch is brought to you without ads or sponsors. It is supported purely by Bitcoin donations from viewers like you. Two best ways to support the show are through our Nostr-enabled, Bitcoin-enabled live stream. You can get to there at citadeldispatch.com/stream. I see we already have two Ride or Die freaks there. Kieran has zapped us 69 sats already. Thank you, Kieran. Or through podcasting 2.0 apps like Fountain Podcasts. The top zap from last week's show with VNPRC was 5,000 sats from a user named Steak and Eggs. Great breakfast choice. Thank you for the sats. There was no message. There was also a couple other zaps there, but there was one from Bob the Cow for 500 sats that said, Citadel Dispatch is the second best podcast on earth after Call Her Daddy. Felt like that deserved an honorable mention. That is a crossover that few have expected. Call Her Daddy listeners are now listening to Citadel Dispatch. Anyway, freaks, that boring ass clip that I started off the show with was, I think, the chair. I don't know if he's the chair of the OCC, but it's the Office of the Comptroller of the Currency. I guess they're in charge of banks. I'm not a bank expert. Maybe our guest is. We have Ride or Die freak, return guest, one of my partners at TEN31, John Arnold. How's it going, John?
What's up? Great to be here. I'm glad you chose maybe the most boring clip in the history of the show to open up this episode with me. Feel very honored.
Well, you're my favorite suit, and I have the pleasure of working with you on a daily basis. So it felt fitting. Also, I mean, it seems like it's a big deal. I mean, I would never want banks to hold my Bitcoin, but that seems huge. Do you have an opinion on that news?
Look, yeah, I mean, well, on the suit point, I literally, before we got on here, I realized I was wearing my Patagonia pullover, so I had to rip that off and I couldn't be the first guest to sport a Patagonia logo on the show, so we dodged that bullet. But yeah, I mean, it's in terms of direction of travel, right? Like I think we all expected it to eventually go this way. To your point on the banking question, so it's the OCC, the FDIC, and the Fed that are the three like banking regulators in the United States collectively. That probably is the limit of my knowledge in terms of who controls what and who does what. And I think like it probably varies based on the administration. But so yes, that all that is to say, like OCC, Fed, FDIC moving all kind of collectively in that direction for allowing Bitcoin custody in some capacity. Still TBD what that's actually going to mean is definitely a notable mile marker. And at the end of the day, like if you've been here for a little while and you've been here longer than me, but if you've spent any time in Bitcoin, you've probably heard the phrase, Bitcoin is money for enemies. So the idea that the most powerful, wealthy organizations that kind of pull the strings of everything around the world geopolitically and beyond, that they weren't going to get into Bitcoin in some way and want to have some piece of that and be able to charge a vig on the AUM of Bitcoin. I think if you thought that wasn't going to happen, you probably haven't been paying enough attention, and you probably aren't bullish enough, frankly, on where Bitcoin is ultimately going to go. I think we've all discussed internally, and you and Marty have probably discussed as well ad infinitum on podcasts at this point, that it's gone there faster than I think we would have ever expected even a year ago. If you looked at where regulations seem to be moving in the US around Bitcoin and broader air quotes crypto. So the last 12 months have been mass reversal. And I think we can get into it. I think there are definite cons to that, to kind of suits being collectively a lot more involved and enmeshed in Bitcoin. But I think there are some definitive pros as well. And either way, I see it as largely just capitulation on a faster timeline than I was ever expecting. So yes, I think all that is a long-winded way to say I think it's a big deal.
It's the most boring, bullish video. So we have Ride or Die Freaks in the live chat. I see Mav21 zapped us 10,000 sats. Super Fat Arrow zapped us 10,000 sats. Thank you, freaks. Guys, just to put it out there, TEN31, the two projects I'm most focused on right now are TEN31 and OpenSats. And as part of that, I've always tried to build in the open and be as transparent and responsive as possible. And so part of that is I think it makes sense to have reoccurring shows that involve team members at both TEN31 and OpenSats. Most recently, I had Nifty and MVK on that are both board members at OpenSats with me. And now obviously we have John here. But as always, the live chat is unmoderated and unedited. So feel free to hit us with any questions or comments you have as we rip here. I would like to be, for this to be as helpful as possible for you guys who have questions. So with all that said, John, I think a good place to start here is you're relatively unknown by those who aren't paying attention. Yeah, Mav21's laughing that he actually zapped us 10,000 Bitcoins. Look, you call the smallest unit of Bitcoin whatever you want. The cool thing about Bitcoin is that anyone can simply push a change to their app and name the unit whatever they desire. It is a beautiful thing. We don't have to argue about it on the internet. John, why don't you give us just a quick rundown on your background, how you got into Bitcoin? I think it'd be good context for people.
Yeah, as Odell mentioned, classic suit. Out of college, went the investment banking route. So 80, 100-hour weeks, arranging PowerPoint logos and churning out Excel models. Did that for a couple of years, and then moved over to what's colloquially called the buy side, just doing basically investment management at a couple large hedge funds, in focusing on the healthcare space. But over the course of like 5 years doing that, fell down the Bitcoin rabbit hole pretty hard. I had been a big Ron Paul guy, big gold bug, and was coming from kind of a libertarian Austrian economics background. But in my previous forays into Bitcoin, I just, I didn't have the depth of my touch points to actually do enough work to kind of grok it and understand what was so meaningful about it. So first time I ever heard about it was in college. It's probably around 2013. I think because Mt. Gox blew up. I had maybe like heard it mentioned once or twice on like Mises Institute pages, if anyone's familiar with that. But I, thought like that's an interesting science experiment, but obviously internet money is never going to work. Fast forward to 2017, kind of working in my hedge fund seat, late 2017, aped in a little bit, nothing huge, kind of not exactly at the Pico top, but probably, like 2 or 3 weeks before crash happened. And I, got scared off by the ICO craze and kind of thought I had reconfirmed my priors that, well, yeah, actually I was right. This whole space is a scam. So not going to pay attention to it. And then finally, third touch point was in spring 2020. And I'll let listeners draw their conclusions as to what led to that reawakening on Bitcoin. But just because of guys like you, guys like Marty, and various other Twitter personalities, was able to kind of fully get pulled down the rabbit hole, and was just kind of a random pleb for a couple of years, working my hedge fund job. And in late 2021, was looking for ways to invest in the space beyond just holding Bitcoin and support some of the companies whose products I was already using. And TEN31 popped on my radar because of you and Marty, and saw that was kind of combining an interesting set of skill sets and capabilities between you guys on the Bitcoin technical side, and then Grant and Jonathan, our other two partners, coming much more from the traditional finance side that looked a lot like what I had done. So, and already at that point, the portfolio was very strong and has only gotten stronger since. But saw all those data points, reached out, started just kind of working with you guys on the side in my spare time as I was able to, and then was able to come on full time in mid 2022. I think literally the day that Terra Luna blew up was like my first day with you guys. So been
nice.
It's been almost 3 years now. Quite a lot has changed then, but I think the thesis thus far that got me excited has definitely played out. So that's my rough background. Reformed suit. But yeah, happy to be here.
Reform suit, ride or die freak. I love the trajectory. And to be clear, spring 2020, when you got reinterested in Bitcoin, that was like COVID crash. March 2020, like we fell from like $11K to $3,000. Interesting perspective to come into Bitcoin in full swing at that point.
Yeah, well, I think it wasn't like the market crapped out and I saw Bitcoin fall from whatever it was, like 9,000 to like 3K or whatever, and thought, oh, I got to get in on this thing now. Like it wasn't so much that. It was probably the next like 1 to 2 months, the policy response to everything,
right? All the printing.
Yeah, on a broad scale, the monetary policy response and otherwise kind of was, I think, I mean, other people have mentioned this in other contexts, so I don't belabor it, but certainly like a pivotal moment for a lot of people, I think, in just understanding a little better, even if you kind of latently understood it before. Like, yeah, I was very aware of the Fed, central banking, kind of the nature of fiat money and fractional reserve banking and everything like that from kind of my Austrian background. But, it's one thing to kind of be theoretically aware of it, another to see just a massive, unprecedented acceleration of it to kind of its logical conclusion in your lifetime. So that reframed some things for me and made it feel a lot more urgent to investigate how to respond to that in my personal life. And so kind of, April, May 2020 was when I started that journey.
Awesome. I guess it was 5 years ago. It feels kind of like yesterday, but also kind of feels like a decade. It's weird. Time's weird. Freaks, I love the activity in the live chat. Average Gary, 5,000 sats. Sawzall, 2.1 thousand sats. DamieX, that's a new name I haven't seen before. Zapped, 10,000 sats, and Chief White is up 10,000 sats. I see some good questions there. So, I mean, this is a crazy time in Bitcoin. I kind of wanted this to be, maybe we'll like mix evergreen good stuff on like how we're thinking about it perspective wise, but also like very topical stuff, because I always like bouncing ideas off of you and perspectives. This week, Bitcoiners lost their cool or were very excited. I got to be very positive. They got very, very excited about Steak and Shake accepting Bitcoin. The interface, the flow is probably the single best merchant flow we've seen to date in terms of just very well integrated, nice little pay with Bitcoin on the terminal. Doesn't launch you out to another page, just puts a QR code there, shows sats, shows the USD to sats exchange rate. Everything is Lightning by default. What is your opinion on this development?
I mean, it's great. First of all, like, great to see. It's very self-evidently like a good thing. So I don't know that I have anything interesting to say on like the positive side of the ledger. Like the hot take that you probably are looking for that we discussed a little bit in our 1031 chat is like, I'm not sure that it's anything more than like a flash in the pan, pun kind of halfway intended. Steak and Shake has like clearly gone down this route of being like, based since like last year, but especially since the election, with like the anti-seed oil crusade and everything like that. And so that's great. I'm not certain that we've got like a two-sided problem right now with kind of mass spending of Bitcoin. Number one being like, you've talked about this on the show, but I think there are probably like certainly less than 50 million people, probably less than 20 million people that like self-custody Bitcoin, or really even like use Bitcoin in a meaningful way. So like people who don't hold it in ETF, people who don't just like leave it on Coinbase, or their preferred exchange of choice. So the population of those with like any Bitcoin to spend at all is kind of small. B, even among those that kind of do have some Bitcoin that they control, off of an exchange, whether in a custodial wallet or not, right? Like the actual units of Bitcoin that they could, spend. There's a huge percentage of those people that still see it as a diversification to kind of their investment portfolio, or something where they want to hold, they have an X% like target of their wealth that they want to hold in Bitcoin, and maybe they want to build it over time. They see themselves as like net buyers of Bitcoin, and they actively don't want to spend it. So there's like that piece. And then that leads into the other side of the problem, which is because the population is still pretty small, and even like a decent percentage of that existing population doesn't really want to spend their Bitcoin. I think big box retailers and like national chains, and certainly even more so like, smaller merchants, like, we've seen this actively, right? Like on the ground, like have real trouble, like viewing it as worth their time to have any incremental overhead to support people coming in and paying with Bitcoin. Like the demand doesn't really seem to be there in mass on a sustained basis. And so like the attitude is, am I really going to access like an untapped pool of customers?
How many people do you think spent Bitcoin at Steak and Shake this week?
How many people total?
Yeah.
Like just number. I mean, it's under 1,000, right? Like I would have to think.
What percentage of the people that went posted on social media? Because there was like 100,
almost 100%.
or 200 posts on social media.
I think very few people went to Steak and Shake to spend their Bitcoin and just to support kind of the merchants receiving Bitcoin, and then didn't virtue signal about it. I think it's a near zero, right?
Yeah, I think it was probably, my guess would be like in the 1,000 range. Which is an interesting dynamic, right? Because part of the reason why I'm so excited about Nostr is that it natively uses Bitcoin as this means of medium of exchange, right? As a way of paying people. And if you look at something like Nostr, according to Nostr.band, to date on Nostr, which is what, like 3 years it's been or something like that. But in the beginning, let's be honest, was kind of broken. I mean, it's kind of been broken until like 6 months ago. It was hard to have a really stable experience with it. 5 million transactions on Nostr. The Primal wallet alone is almost at 2 million Bitcoin transactions sent. And it's interesting seeing the maybe the lack of excitement for Nostr in comparison to the maybe overexcitement of Stake and Shake. But that said, I mean, I think it's undeniable that this was a major narrative win. I think I saw a bunch of posts that like, oh, well, you have Bitcoin. What can you spend it on? It's like, oh, well, I can spend it on a burger. I feel inclined. So that's a win. That's a big win, especially in a cycle that is very dominated by store of value and investment use case. It's good to see the opposite, right? This is also why I on Rabbit Hole Recap this week, we highlighted the fact that the Bitcoin Vegas conference is going to try and break the world record for number of Bitcoin payments done in person, because these narrative wins, they do matter, right? And I want people. Good money you should be able to spend it and save it without permission. I prefer to spend Bitcoin. My biggest issue is that there's not places that I can spend it on. The other piece that is interesting here to me is one of the issues we've seen in terms of merchant adoption, specifically physical merchant adoption, is that it requires training of the help of the staff. And what happens is maybe one person pays with Bitcoin a month or two people, and then you come in and you check like BTC Map or something, and you want to pay Bitcoin at this location, and you walk in and you ask the staff, like, do you accept Bitcoin? And their eyes glass over. They have no idea what you're talking about. The fact that it seems that Stake and Shake has already fired all of their frontline staff and just uses touchscreens is probably a win in that regard, right? It's like you add the button once and you don't have to do any additional training. Like the button's on the touchscreen. Like you're not talking to a person. There's no training of an individual. So I think there's a piece there that makes me a little bit more optimistic that this will be a long-standing thing. The last thing I would mention, as someone who works very hard for his family to avoid seed oils, there's a little key aspect here with the Stake and Shake thing. They stopped using seed oils in store, but the fries come pre-seed oiled when they arrive at the store. And I think people aren't aware of this. And I don't want seed oil washing. I want people to be aware of that. But before we move on to the next topic, John, how much of this is because we as a collective last cycle kind of false started merchant adoption? Like, I mean, I remember I was personally very excited. At some point, I believe that Bitcoin will become very commonly used as a medium of exchange, people paying and receiving Bitcoin. I think at some point, more people will be paying Bitcoin than selling Bitcoin, will be receiving Bitcoin than buying Bitcoin. And we were kind of, I think we got a little bit too excited last cycle. Is part of your skepticism based because of that?
I mean, that's a piece of it. I wouldn't say it's like necessarily, it seems like what you're saying is like, is it just scar tissue from like, we were more bullish like last cycle and it didn't happen in the way that we expected or hoped as quickly. So like, does that kind of weigh on me? Like, not so much. Like, I wouldn't say, I don't think I was like hyper bullish last cycle on medium of exchange use cases kind of like becoming super widespread and super mainstream for the same reason that I just think that I just cited before, which is like there are not that many people that like have Bitcoin. There are very few people that kind of know what Bitcoin is in any meaningful way. It can differentiate it from ETH or any other kind of shitcoin out there. And then there's an even smaller pie of people that actually have Bitcoin and then a smaller pie of people that kind of want to spend it. And I think there's got to be I think we need to hit a higher threshold of like total wealth, not necessarily people, because I think like, and this is a discussion we can maybe get into on some of the other topics, but like a lot of, wealth is disproportionately controlled by like a small handful of people. You can like cite whatever statistic you want on that, and like, maybe that's good, maybe that's bad. I think that there's always like going to be a natural dynamic where that's the case. So it doesn't necessarily have to be like every single person in the world is orange pilled, but you do need like a significant amount of cash balances, as a percentage of global cash balances held natively in Bitcoin, such that people like maybe the people on this podcast have little choice but to spend their Bitcoin, right? And so like I don't yet see like the demand push and on a mainstream basis for like people to come in and spend their Bitcoin that would be necessary to probably lead to like a mass kind of medium of exchange push. I think we have just a long way to go to get like Bitcoin in the hands of more people and get more cash balances and like total wealth converted to Bitcoin first before you really start to see that kind of take hold. So and I've always thought as well, like the Steak and Shake thing is good to see because, to your point, it's table stakes for any of this to happen, for it to be as smooth and easy as any other type of transaction. Like there has to be complete parity. There has to be no additional burden, no overhead for employees or for customers. It's got to be super smooth. But I've always felt like the natural bridge mechanism to get to kind of like Trojan horse more Bitcoin transactions into like mainstream big box retail, like medium of exchange type setting, is to have something where Bitcoin is, effecting the value transfer, right? And it's, effectively the rail in the middle. But at either end of the transaction, you have, at the edges, you have whatever kind of currency conversion, you want, so you walk in with dollars, you pay, you have no idea that like what's happening under the hood is that Bitcoin is affecting that transaction, and the merchant, receives into a bank account dollars, but but you cut out the middlemen that have come to dominate, existing medium of exchange structures, right? And that way you have like something that's super easy, something that's super convenient for both sides, and actively cuts out costs for like low margin businesses that could be very meaningful to the bottom line of all these businesses. Like that's a way I feel like you are much more likely to ultimately get Bitcoin like into it's full flowering of like medium of exchange use, when a lot of people are kind of leveraging it without even being aware of it, without having to be orange pilled or adopt any kind of new software or any kind of new payment terminals. I think that's like the ultimate like killer use case that would really scale it up like 100x from a medium of exchange kind of viewpoint. But so yeah, I mean, there's some scar tissue, but I don't know that that's like my main kind of reservation. But all that said, I'd love to be wrong. I'd love for this to go completely viral, and for it to be mainstream next year.
Hopefully this is a trend, but it's not a trend yet. Yeah, I mean, I see one comment here from Mav21, which is something that I've been thinking about a lot lately, is like this aspect of like, could there be from a tech point of view, kind of like a black swan type of situation where we just go from 0 to 1 and Bitcoin is accepted in a ton of places because of something like Apple Pay adds Bitcoin to their wallet. Like if I can just load up my Apple Pay with Bitcoin and just tap my phone anywhere Apple Pay is accepted, the merchant doesn't even know they're accepting Bitcoin. Apple settles on the back end. Mm-hmm. Then maybe that happens. But barring that, I think it's just going to be a slow, steady grind. I think it's a little bit different from our next topic, which is I want to ask you your opinion on Bitcoin Treasury companies. But with merchant adoption, I feel like it's going to take longer, and it's not as momentum fueled. I think it's going to be small wins that we see over time, that slowly and steadily Bitcoin starts eating away at transaction volume in terms of retail. But yeah, so the big news of this year, in the last 2 years, has been the rise of MSTR and copycats. How do you think about that strategy? How do you think about that development?
Yeah. I mean, it's like I've gone back and forth on it. From like I don't know how much you want, Bitcoin Review is kind of known as the show that is best at putting people to sleep. I can go on a whole kind of corporate finance rabbit hole and like really put people to sleep if we want to do that.
No, let's
But
not put people to sleep.
high level, like it hasn't. I struggled with it initially because at the end of the day, like a corporation, especially a publicly traded corporation, like does not function just to hold liquid assets that its investors could hold themselves without friction, right? Like it's drawing in capital to do something that the individual investors, could not do by themselves, and implicitly, like they have decided that the most efficient way to like organize their capital and organize production is under the form of a corporation or a publicly traded corporation in some cases that can kind of deploy their capital effectively to some end to generate some return over some hurdle rate. Like that's basically it, right? And so with a company that makes cars or a company that makes clothes or any kind of goods or services, like you can make a strong case that like we can't do that as efficiently as individuals, so we need to have capital come in to these different structures and do that, and that drives a better rate of return overall. But you can hold Bitcoin, right, in many different vehicles. You can hold it in cold storage, single sig, cold storage, multi sig, collaborative custody. You can hold it in the ETF if you want. You can put it on an exchange. Don't really recommend that, but like something you can do. And generally for like pretty much no slippage, pretty much no fees. Comparatively to most other assets that people hold. So, it's always like it initially, was pretty mystifying to me what the value is or was of doing this in like a public company vehicle, like especially because at the end of the day, like if you're explicitly one of these companies and you're explicitly not going to distribute the assets, basically the fruit of the assets that you've accumulated, which ultimately like companies are traditionally valued on that, right? Like discounted cash flows, dividends, whatever. The idea is like I put up my capital and you distribute at some point in the future. Maybe it's 10 years in the future, maybe it's 50 years in the future. You distribute either through dividends or stock buybacks, you cash that benefits me for holding the equity. If the story here is we're just going to hold this indefinitely, and in fact like the story falls apart if we ever say like we're going to get distribute any of this Bitcoin, then it basically all this is preamble to say like there's a lot of reason I think to be skeptical and suspicious about like this concept in theory. I think that there are players out there, having looked at it more, that for various reasons and MSTR is like the obvious one, right? Have had the ability, some of it I think is as a result of just historical accidents and kind of, call it accidents of the capital markets and restraints and regulations on different pockets of capital, have been able to take in capital and for $1 of capital, they've been able to accumulate more than $1's worth of Bitcoin. The debate would be, well, how long can that actually go on? Is there some reason that they should be able to do that indefinitely? And I think for the vast majority of the companies that are coming to market now, and we're seeing like, I'm not the first to say it, but this is basically like the ICO craze of this cycle, perhaps. For the vast majority of those, I think the answer is going to be no. I think the strategic value and kind of competitive edge and mind share, which is really important here, is going to accrue to like a few of the big players that can move really fast in size. And, the rest of them will probably trend toward, something like 1x NAV. A lot of them will trend to zero because they'll probably, take levered bets that blow up at exactly the wrong time. And, the equity will end up being worth, nothing. But I do think like there's some merit to a couple of these. And I think that they may even help juice this cycle a lot more than otherwise. Ultimately, the flip side is probably there will be games played by a lot of them that then help author the next bear market. So I guess I would sum it up by saying on a 1 to 10 kind of scale, where 1 is Bitcoin, on a 1 to 10 scam scale, where 1 is Bitcoin and 10 is I don't know, ETH, maybe ETH's not even the scammiest of scams. Maybe that's like an 8. I think like
But
these
XRP is 10.
XRP is a 10. That's right. Yeah. ETH is high, but XRP would be a 10. I'd say this trend is on like, is like a 5 maybe. Right.
Interesting.
I think MSTR is lower on that scale. There are some others that are higher on that scale. But yeah, that's kind of how I'm looking at it today.
Interesting. I mean, so MSTR right now is trading at a 2x NAV, right? So it's basically, I mean, what Saylor has said is my goal is to increase your Bitcoin per share, increase the amount of Bitcoin that each share is worth. So presumably that's pricing in the thought that he'll at least double your Bitcoin per share. And you think that NAV, like, do you think that's a justified NAV? Or do you think that goes up, or do you think that goes down? Does it go negative? Can it go negative? Is it like GBTC?
Yeah. Okay. A couple things. I have no idea where that multiple is going to go.
This is not financial advice.
This is not financial advice.
We should probably start talking about commodities and not securities.
Yeah.
All that shit scares the shit out of me.
Yeah. I mean, certainly not financial advice, and anyone who tells you they know where Bitcoin's going or where MSTR is going is probably not someone you should listen to. But I mean, so a few things. Like when I think about the amount of Bitcoin that MicroStrategy has, and let's put aside the question of like, well, do they actually have it? And
let's assume they have it.
Let's assume they have it. I think it's a valid and legitimate conversation to ask. Do they actually have economic benefit from the Bitcoin that they claim to have? And how secure is that? And why don't they provide proof of reserves and addresses and things like that? Like that's all legitimate question. But if you assume that they have it, and they are exercising control over it, and aren't going to get it 6102 to start the U.S. Strategic Bitcoin Reserve,
right?
Think about the replacement cost of 575,000 Bitcoin, right? Like
it's way higher than 2x.
Yeah, could you even go buy $575,000 of Bitcoin without like significantly moving the market and get that much Bitcoin like quickly? Like probably not. Right. When MSTR
it'd be difficult. You'd have to try difficult to near impossible.
Yeah. So when MSTR had 5,000 Bitcoin or 10,000 Bitcoin on the balance sheet, like, okay, you could replicate that probably pretty easily. And even like a multiple of that, you could probably replicate. So the first thing that I'm wondering with it is, has it gotten to the point of a level of critical mass and escape velocity where, getting even that much Bitcoin into like one single pool would be impractical enough that there should be some premium applied to like that stack of Bitcoin. So that's one question. The next thing I would like go through in the progression and ask myself is like, well, if we're heading eventually to a Bitcoin denominated financial services future of some sort, then Saylor has, several percentage points of the most valuable resource on earth. And he starts to look, and I think, he's pretty clearly tried to, like, it seems, try to position, the company more and more in this way. Like, does it start to look more like, a bank of the future, right? Like someone sitting on a huge pile of the right. Capital asset of the future that everyone wants. And so if it looks like a bank and that's ultimately where he's going, well, JP Morgan or even like Berkshire Hathaway or something, like these companies that have used, their asset bases in very creative ways. Those guys have, traded at certainly, whether it's 2 or, I think 3 is on the high end in terms of book value, but they don't trade at 1, right? They don't trade exactly at
right.
NAV. And when we talk about like NAV, what we're talking about is book value, right? It's like assets minus liabilities. And, none of those institutions generally, like when they're healthy and doing well, right? When they're distressed is a different question, but like they generally trade like notably above like 1x. And so if you think that there will be some sort of like future where there's something at all productive to do with the Bitcoin, like Bitcoin denominated, yield, I'll say, right? Like lending out Bitcoin in some way, but not like scammy yield. Like I'm going to give you, I'm going to lend you some amount of Bitcoin. You think about, when Bitcoin is appreciating, like, let's say if we're in a future where Bitcoin's appreciating like 5% a year, 10% a year, or whatever, you probably have much less debt in a world like that, just because that's much more expensive to service. But like, you can imagine like economic arrangements where someone gets Bitcoin, a capital provider gives you Bitcoin in some structure, and if you're a successful business, you can repay that with some interest rate or dividends or something, right? So if there's a world like that where you could do that with all of Saylor's Bitcoin, then yeah, it's not clear to me that that pool of Bitcoin should just trade at like 1x, right? So I think with a company like that, a vehicle like that, I think you can make interesting and not totally insane arguments for there to be some premium for the guys who are on Twitter posting in all caps that here's my price target for when. No, not like you. I would never lump you into. You're not on Twitter, right? But the Twitter bros who are on on there posting their sensitivity tables showing here's what happens when MSTR goes to like 10x NAV, and it's gonna be worth Apple and Nvidia and Meta combined, right? Like, I think that's probably not a case I can subscribe to, but the idea that it should have like some premium to one, to me, is, given how big the pool is and given how actually well constructed at this point the balance sheet is, and how I think low risk it is for Saylor to completely blow up at this point, I think it's hard for me to say that it should just be 1x. Not impossible for him to blow up, but I think for it to go to for the equity to go to zero, or very, very close to zero, I think you've got to have a prolonged bear market sub like 25,000 that sits there for like years, right? So all that is to say, like, MicroStrategy is a special case, or strategy, whatever. And I think the players in the game that can quickly develop like a huge treasury, maybe can get to a point where it becomes a bit of a self-fulfilling prophecy, where that capital base gets so big that they can either, efficiently use it and leverage it to mount like a real case that they can grow Bitcoin per share and acquire more Bitcoin more efficiently than you could with that same dollar. And or like that they'll have this strategically advantaged kind of position over the next number of years as Bitcoin gets more and more integrated into financial services. But
you could even make the argument that like the traditional cash pile argument, right? Where like he could do strategic acquisitions or something as Bitcoin adoption slows down, and he'll have the most dry powder out of anyone.
Yeah. But I mean, yeah, it's the flip side of it, right? Is like people see a good thing, people see a successful thing, and they want to do their own version of it, right? They want to copy it, they want to like ride on its coattails.
Yeah.
It's I like Bitcoin, buy my shitcoin. So I think we are just in the first inning of seeing like companies coming to market with their Bitcoin strategies. I mean, you already see it's a lot like summer 2017 with like you remember like Long Island iced tea, adding blockchain to long blockchain, right? You see these companies putting out these press releases where they're like,
but they were all miners back then. They were like Long Island iced tea like bought like 10,000 mining rigs, and they were like, we're Long Island blockchain.
Yeah, that's right. But yeah, you see these guys putting out these PRs where it's like, we've initiated our Bitcoin strategy and we're targeting $1 billion of Bitcoin in our treasury. And you read through it and it's like, okay, well, like, yeah, their board is evaluating a capital plan that illustratively, theoretically, might someday allow them to buy $1 billion of Bitcoin, right? So we're just at the beginning of seeing that. And I think, unfortunately, a lot of people will get burned and rugged by all of the kind of ankle biters that pop up over the next year and change, trying to or maybe even longer, trying to chase this trend. But I don't think I'm not convinced yet that the entire strategy is completely like asinine and backward and doomed to failure for every single company that tries it. I think it probably is for like 95% of them, right? But I do think there's some degree of signal there that will kind of ride out through a cycle or two, because it's like Bitcoin is such Bitcoin, just because like if Bitcoin is what we think it is such a powerful capital asset. There's no way you're not going to have the speculative attack that Pierre Rochard wrote about 10 plus years ago, taking some kind of shape in like the deepest, most liquid capital markets in the world. Like someone, Saylor and his successful followers like are going to figure out ways to cheaply access capital, whether that's diluting shareholders or doing converts or doing preferred stock offerings or all these different things. Like
Right.
they're going to find ways to at a low cost of capital buy more Bitcoin. And that's what like individuals are doing every day, right? If you're taking out, a Bitcoin backed loan to buy more Bitcoin, or if you're borrowing, from your bank at like if you're doing an ELOC from your bank to go acquire more Bitcoin, like you are running the same playbook, right? Yeah, exactly. Right. Like you're running the same playbook. And so the idea that it would not be possible for some corporations to do the same thing at a much greater scale in these huge liquid markets is, I think probably misguided. That said, a lot of them are going to blow up.
Yeah, I mean, the difference with an individual or like a small business or a startup, which is what 1031 is focused on, is the cash flow element, right? And MSTR originally started with not insignificant, healthy cash flow. Now, at this point, the cash flow is like incredibly dwarfed by the Bitcoin position, which is why I think when people are trying to price it, they're obsessed with the NAV. But if you have actual positive cash flow and you're actually a profitable business or a profitable individual and your income is higher than your expenses and you're putting that into Bitcoin, that to me always has seemed like the holy grail. Like that is, I've had dentists reach out to me, right? And they're like, I'm a dentist. I have a dental office. I love Bitcoin. What can I do to like further the movement? I was like, you should just be a dentist that holds Bitcoin. Ideally accept Bitcoin. Maybe you have like one or two clients that wants to pay in Bitcoin. That helps out those clients. You help be a part of the movement, but just be a profitable dentist and stack sats. You'll be probably you'll probably have some of the most options available to you in 5 years, 10 years out of any private dental office in the world, because having that capital, having that treasury gives you optionality. But just before we move on to the next topic, because given your background, and given your background, you tend to be like my oracle in terms of like pricing things and pricing businesses. Do you think is focusing on the NAV of let's just focus on MicroStrategy, because there's all these copycats and there's nuances and additional risks to all of them. Obviously, strategy is the big dog in the room. Is the focus on MNAV the wrong way to price it? Like, why are people? No one does that. I mean, you don't really see that kind of valuation when you're talking about something like Tesla that's trading at like massive PE multiples.
Yeah, I mean, I think there are a couple of things there. So the first is to get back to my bank example. It certainly seems like they're skewing themselves in that direction, and a lot of traditionally like banks are valued on book, right? So doing like price to book is I think it's like fair from that perspective, if that's kind of the direction they're going to go. And I think that's like the business model that most people can like most easily map onto them. So I don't think that's crazy. I think the other thing is like they also have yet to show like Tesla. Well, Tesla's maybe a bad example, but Nvidia, Apple, Meta, these companies and non-tech companies too, like traditionally are valued on something more like price to earnings or price to free cash flow or EV to EBITDA. But basically, like you're valued on like your recurring like business operating earnings of some kind. Like you can pick whatever metric you want to reflect that, but they're kind of priced that way. But I think MicroStrategy has yet to show that it can generate anything equivalent in terms of kind of operating earnings. Some of the MSTR bros will kind of try to argue that thanks to the changes in FASB rules, you now have like this concept of Bitcoin yield or Bitcoin gain or Bitcoin income. Like Saylor's got all these different metrics, which I think are like reasonable to kind of frame up what's going on. And you definitely do want to look at that to kind of understand like, well, is he actually efficiently increasing the Bitcoin hodl of the company or not? Like they're relevant. But the problem is, and I alluded to this earlier, like with an Nvidia or an Apple, you can look at earnings or, even better, free cash flow, and say like that is a proxy or like an analog for what I as a shareholder can receive from this company, even if they choose not to distribute it. They can pay dividends or they can do stock buybacks that proportionally increase my ownership of the business. And that will ultimately be governed by, the cash flow that they can generate. So I can kind of like, as a shortcut, put a multiple on that. And get to some sort of like valuation that maybe makes sense. The difference, especially that I see with MSTR, is not only have they not proven that they can kind of do that, even more importantly, like the Bitcoin earnings that they're generating right now are not, like, I think in principle, like, not distributable. Like, obviously they are, but the second that Saylor turns around and says, all right, I'm paying Bitcoin denominated dividends to my shareholders, or we're going to fund buybacks through kind of our Bitcoin hodl or something. I think the second he does that, the whole narrative collapses that this is just kind of like one-way machine to acquire Bitcoin. So if he does that, like, I think he's implicitly saying we no longer see a way to capital efficiently acquire more Bitcoin per share, basically. And so we're just going to now turn this into like a distribution vehicle. At that point, there's no reason it shouldn't basically trade at, 1 times NAV, and kind of the whole game stops, right? So I don't think it's like reasonable to look at kind of his metrics of like Bitcoin earnings and say, well, it should just be, we should use like a PE ratio for that, because like the earnings between like Nvidia and MicroStrategy are just completely different in kind. Like they're not like approximating the same thing, which is like distributable cash flows back to shareholders. So for now, I think like capitalizing it on NAV and looking at it that way is like a pretty reasonable approach, especially since they're kind of taking that banking route. Anyway.
Okay. I think that's fair. Let's go to an audience question, and then we'll go back to an Odell question. How does that sound? Super Fat Arrow is asking if we as 1031 would invest in direct competitors, or once we have a horse in the race, would we back that one only? What are your thoughts?
Yeah, I mean, I think a couple different ways to look at it. Certainly if you look at our portfolio that we have like on the site that anyone can go look at, we've definitely got companies on there that overlap in some of the products that they provide and some of the services that they provide. I definitely think there's room for us to invest in a lot of different companies that play in similar pools, because the market opportunity here, if we're right, is so massive that competition, like as such, is not going to be the main governor on like whether these businesses kind of do well or not, right? So if you're taking kind of the 5 to 10 year view on where these companies are going to go, I don't necessarily worry that much about like I worry way less, I guess I'll say, about competition among Bitcoin companies than I do about things like, we've talked about regulatory. You had regulatory episodes on the show recently. That's a piece that we're always like much more worried about. I worry about, distraction from like altcoins and Bitcoin treasury companies and things like that, like diverting, attention away from some Bitcoin native, financial services and things like that. Fortunately, I don't think that's hindered a lot of our businesses thus far, but that's something that kind of like slows down potentially like, the secular tailwinds of Bitcoin uptake. But I think like the underlying like market tailwinds are much more of a focus point for me and for us. And then like there's competition between like the other like competitive element too is like competition with incumbents. Like the race is always like, will the startup find distribution before the incumbent finds innovation, right? And then to the extent that incumbents kind of want to get more into like these pools, like maybe enabled by the OCC and FDIC and Fed changes, like if that happens, how do incumbents look at the companies in our space? I think they'll probably look at a lot of them as strategic targets, but they may also look at them as competitors to be squashed and to be done away with in some way, right? So from a competitive angle, that's what I think we're all much more kind of focused on. I think there's room for us to invest in a bunch of different companies that are all kind of overlapping in some of the things they're providing, because generally these companies, when you kind of look under the hood, are not all doing exactly the same thing. They have certain products that overlap and then certain ones that don't. I don't know that we've ever invested in two companies that do like precisely the same thing, that have the exact same value proposition to customers, and the exact same customer bases. Like if we were ever, given a situation like that, like, yeah, I think we'd probably have to pick, one horse over the other. But as it stands, I think like that issue is not something that I think we lose a ton of sleep over with the portfolio.
Yeah, I mean, I guess there is an example with like Nodl and Start9. But I think that's also a good example of just the pie is so small, right? Like if the goal is people self-hosting easily with low friction on open source software, the hurdle is not each other. The hurdle is actually like moving society to that type of world. And usually, in most cases, a rising tide lifts all boats is what we're seeing and how we're kind of playing it out. I mean, I would add to John's comments here. There have been a couple situations that we have to be delicate with it. I will say, just in general, this space is way smaller than people pretend it is, particularly when you're on like in terms of like businesses and like founders who are building in them. It's way smaller. We're at all the same events. We're like in similar circles. There's a lot of friendships involved. So like most things in life, there's a lot of people things to navigate and relationships to navigate. But I think if you're truthful and you're transparent and you act in an ethical way, we haven't seen, you'll see occasional flare-ups on Twitter or whatnot. But mostly, I think people strongly do believe in the idea of like same team, where we're all working towards the same goal and we all can benefit from it. I will also add, just like if you go to our website, if you go to 1031.xyz, 35 companies are listed there, or maybe 36 now at this point. But if you actually like in terms of funds deployed, percentage wise, it's a much smaller subset is the overwhelming majority of money we've invested. So when those investment sizes get larger, right? Like we've invested $150 million into Bitcoin companies. When those investments get bigger, then all of a sudden you have to be a lot more, obviously you have to be a lot more deliberate in terms of prudence and making sure it's a good investment, but also in terms of conflict of interest there. And in that situation, we do tend to coalesce around who we think will, have more market share and have a stronger business. Do you have anything to add before we move to the next question?
No, I think that's all reasonable.
It's a good question. I see another question here that I can just answer real quick, bringing up, I think it was Average Gary who said it, but now I can't find it. Asking about the grant we gave Callie. How does 1031 determine grants like the one we gave Callie differently than venture funding? I mean, it's quite simple. An open source grant is for a project that we just think is important, that is not easily monetizable, or maybe it doesn't even make sense to monetize. Like in Callie's case, like I think you add a lot of regulatory risk. As one of the investors of Samurai Wallet, I think we know about regulatory risk and taking deliberate risk more than others. But in Callie's case, like I think it's important that he never directly monetizes it, and he keeps it as an open protocol and doesn't custody people's funds. So we just provided him a grant because we think it's good for the ecosystem. We think it benefits our investors. We think it benefits our portfolio companies. We think it benefits Bitcoiners in general. Obviously, the lion's share of grants that I'm personally involved with come out of OpenSats. But there is a nice... I think businesses and individuals should be providing grants to developers directly without middlemen. And I would like to see more of that. Our whole team at 1031 would like to see more of that. And I think the way you see more of that is by leading by example and doing it, right? And there is a beauty of just giving a grant with nothing expected in return and not having to work under a nonprofit framework where you have to take all this different identifying information and stuff. So for that specific situation with Callie, we literally just reached out to Callie and we were like, we would like to support you. Send us a Bitcoin address, and we sent him some Bitcoin. Okay, back to an Odell question. So people that were listening to Rabbit Hole Recap since we started in 2018, I think it was 2018. Maybe it was late. Maybe it was 2019. I don't know. Whatever. 7 years, 6 years. When we started, I hated VCs. I was like super anti-VC. I was like very loud anti-VC. What makes what we do at 1031 different than the A16Zs of the world, the Sequoias of the world? Like, how do you think about that?
Yeah. I mean, I'll say I also like did not care for VC and still don't. Like, I don't largely think it's a very attractive asset class. Maybe 20 years ago, mainstream VC was, but it's gotten so bloated and just full of the incumbents that have existed for a long time have gotten just massive, and I think they've got an asset base that they just can't realistically allocate into kind of true 100x 1000x like early stage category killers anymore. And meanwhile you've got like just this ecosystem of kind of undifferentiated like generalist tech investor ankle biters that have popped up over the last especially 10 years. And I think you're seeing now, for anyone who's paying attention to that ecosystem, it's starting to come through in like returns and lack of distributions, especially from a lot of those smaller funds. And so, I think I was and am right there with you on like general VC. And I think, what we do that's different than that, that made me kind of excited to join and made me want to get involved is, I mean, first of all, we're hyper focused on a space that we believe has massive secular tailwinds. So we're not just kind of an also ran in kind of B2B SaaS investing or whatever. Like we're purpose built to be, this hyper focused machine on this one vertical that we think is ultimately going to touch every, industry in the world. But we have this kind of differentiated and specific specialist lens on that I think is necessary to have any kind of differentiated returns in, early stage VC or private markets investing, like in general, right? That's a piece of it. The other piece is, because we're so focused on Bitcoin, and because we're all Bitcoiners first, and are so levered to Bitcoin and, both the asset itself and also just like the ecosystem around it. We come at things from the perspective of Bitcoin being our opportunity cost. So that plays into the investments that we make and why we make the ones that we do and what we find attractive and what we don't find attractive. It's a filter for us to not just invest in the latest hot round of, what everybody else in the Valley is investing in, right? Because we need to feel very good that we can underwrite like a Bitcoin denominated return on an investment over the course of our fund life. And it also biases us as a result toward investing in not businesses that not only have great potential like tailwinds and massive market opportunity and secular opportunity to grow. It also biases us toward businesses that we think can be scalable quickly and can have really profitable. It can become very profitable quickly, so that they can start stacking sats and adding that to their own balance sheets, and so that they can get to a point where they no longer need capital from us or from others. They don't need to take any more dilution, so that they can give up the smallest amount of potential kind of Bitcoin possible, right? So they can keep our equity protected and get to a point where they're generating Bitcoin for their investors as fast as possible. And all the companies that we focus on also are kind of in that same boat from their perspective. They're all Bitcoiners first. They would be, they could be working at a Google or a Meta or an Amazon or something as software engineers, or at like a hedge fund or a bank or something, probably making a higher fiat salary and using that to stack sats for their personal balance sheets. But instead, they've taken the leap to go build a business in the space that they think has all these tailwinds. And so they're also hyper focused on their Bitcoin opportunity cost and getting to Bitcoin denominated profitability as fast as possible. And that kind of focus on our side and on our company's side of getting to kind of self-sustaining unit economics as fast as possible and getting to a point where you're actually producing returns for your investors as quickly as possible is completely antithetical to the way that generalist VC operates, or has operated for the last 15 plus years during ZERP. And I think you can't understate how much that changes and kind of flows into how you look at companies and how you look at capital deployment. It's not growth at all costs. It's not just burn as much cash as you can to do a land grab and get as big as possible as quickly as possible, so you can go raise your next round from some other VC who's being funded implicitly by infinite money out of the Fed, and they'll give us a markup, and then we can go use that to go raise our next fund to kind of rinse and repeat, do the same thing. I think we're all coming at it from the perspective that world is ending. We're coming up on kind of the end of the unconstrained fiat experiment, and whether kind of the dollar dies, whether fiat dies, whether the Fed dies in the next 10 years, I don't know, but it's pretty clear that the free money train is slowing down, if not coming to an end entirely, for a lot of these types of investors that I mentioned that have popped up over the last 10 or 15 years. And I think we're on the forefront of looking at the world through that lens, where most kind of VCs are still stuck in this mindset that the good old days are just about to return, and the IPO market's about to heat up, and any day now we'll be able to get our next markup on all our unprofitable businesses that we're invested in. We just look at things totally differently because of that Bitcoin focus.
Well said. Do you think, on that note, I'm fascinated by this aspect of Bitcoin as almost this shared equity? If you're, if you're Jack Mallers and you're at Strike, you personally hold Bitcoin, your company holds Bitcoin, your employees hold Bitcoin. If you're Parker Lewis at Zapright, you personally own Bitcoin, your company owns Bitcoin, your employees own Bitcoin. How do you think about that dynamic? I feel like that is a key differentiator too, that just no matter who you are in the ecosystem, you're literally have this shared common monetary incentive to grow and improve.
Yeah, for sure. I mean, it bleeds into every single company that's building anything of value in the space, that's enhancing the ability of people to get Bitcoin, to secure Bitcoin, to use it in different ways, is adding to, at least on the margin in some degree, right? Adding to the embedded value in the ecosystem and in the asset. And because this is an open network, something we talk about a lot with investors, the companies in our portfolio all benefit in a very unique way from kind of participating in essentially the same broad project, right? One company may be working on financial services for Bitcoin, another company is working on some sort of consumer application, another one is doing mining services or something. But they all have the ability, either often directly through partnerships that are much less that have much less friction because they're all operating on this open standard, or just indirectly of each kind of enhancing the others, relative, the value that they're holding on their balance sheets and the value of their businesses in that open network. all the companies in our portfolio can benefit from each other and play off each other in a way that you don't see in like a traditional VC portfolio, where you've got like a, some med tech company, and then you've got B2B SaaS company, and then some like wellness company. Like they're just not, in anything like the same swim lane. And all of their ecosystems are also like every stack they're building on is completely closed source. And, you've got people reinventing the wheel at every single business kind of in their own way, versus like, every business in our portfolio just about kind of leveraging BDK, for example, like this great open source library, that's a force multiplier for very small teams. You had Rob Hamilton on 1 or 2 episodes ago talking about that specifically, about how that's helped Anchor Watch build much faster with a very lean team. That's the kind of stuff that you're just not going to replicate in any portfolio that is not kind of leveraging, where the companies are not leveraging this kind of one common shared open source, set of standards. So I think, like shared equity is an interesting way to put it. I definitely think that's a big differentiator too for all the companies that we invest in.
Love it. Okay, back to audience questions. Gary wants to know, do you see any pieces of Bitcoin infra services that are missing that could be a good business? He left that part out, but presumably that would be a strong monetizable business, not just for good feels.
Yeah. I mean, the one that I like that we've talked about with various companies in the portfolio, that I've kind of been banging the drum on for a while internally, and I think everyone like is directionally aligned, but like kind of an all-in-one place for your Charles Schwab type client to get everything that they need in financial services out of Bitcoin without having to touch at first anything related to Bitcoin itself, while still benefiting from actual kind of assurances that can be provided on chain, right? And not just like buying on Coinbase. And doing that in a way where you can get everything that you would be expecting out of like a private wealth management product at a Schwab or at an Edward Jones or something, while still having the benefits of relative trustlessness that Bitcoin can provide. There's been a lot of talk about kind of multi-institutional custody. I think that's one pathway. Anchor Watch, which I just mentioned a second ago, is working on kind of fusing insurance with Bitcoin. You're seeing more and more kind of movement toward that kind of business, providing something that's catering to like basically where all the money is, right? Getting the people that currently have big fiat balances, whether that's in, cash or stocks or bonds or something, getting them a way to securely leverage Bitcoin. And when I say leverage, I just mean use Bitcoin. They may also be, leveraging it in terms of borrowing against it, but
the banks definitely
using Bitcoin securely. Yeah, right. Exactly. In a way where, they could still have assurances that, they're not putting their money into an FTX or, a Coinbase honeypot that, where they can just kind of have overnight zero of their balances. Right. I still think like, Bitcoin is 15, 16 years old. We still really haven't cracked, like we call it the order of operations, internally and on investor calls. Like, the adoption of Bitcoin is going to have to go through that kind of order of operations. And right now, I think we're very much in the first inning of that. We were alluding to that earlier with the payments conversation. And so I think like when I think about missing pieces in the industry, it's where can I go to have the assurances of, or something approaching the assurances of, Bitcoin on, my cold card with my seed stamped in steel. Something like that, much closer to that than, I have some Bitcoin on Coinbase, while not immediately having to take on the burden of being in any way technical, knowing what an XPub is, knowing what an output descriptor is, knowing how to use a block explorer, like any of that. And probably only 1% of people will actually take further steps to really investigate. But I think the point would be set it up in such a way that even though most people will not investigate, it still is, set up to not be a giant honeypot or a giant rug where trust is distributed in some way. And so I think bridging those two worlds to me is still kind of the holy grail for bringing a huge amount of wealth into Bitcoin natively and not just letting it all default to, IBIT on exchange accounts. And a lot of it's going to go that way regardless.
Right.
But I still think there's massive value capture to be had in a product like that that can be kind of side by side with, an IBIT-like experience.
Yeah, I mean, maybe how we see that unfold is one of these existing private wealth juggernauts goes and acquires a company, like an existing Bitcoin company. Charles Schwab buys Unchained or some shit.
Yeah, I mean that's my guess, right? My guess is, I mean, you've seen Schwab, for example, over this past year, like make a bunch of overtures about offering kind of Bitcoin custody, and it makes sense, right? Because when you think about a platform like that, if they've got clients that want Bitcoin exposure, right now what they can tell them is like, okay, well, you can buy IBIT, right? But Schwab doesn't make anything on IBIT. I mean, BlackRock, barely makes anything on IBIT right now too, because the fees are so low temporarily. But like, you've got a few ETF providers, BlackRock, Fidelity, ARK, etc. Like they'll make some fees on. Yes, Bitwise. I shouldn't have forgotten them. They're key part of the ecosystem. But they'll be able to make some fees on those balances, and they'll be able to benefit from the natural like tailwind of AUM growth as Bitcoin does what we think it's going to do. They can take a fixed bips fee on this growing value, but like Schwab, Edward Jones, Ameritrade, Ameriprise. And all these other long tail of wealth management platforms that have like tens of billions or hundreds of billions or trillions of dollars, like they're missing out on being able to actually charge clients anything by just referring them over to IBIT. And so I think there's going to be someone eventually who looks at the space and says, if I just own a tech stack that allows me to natively provide some sort of like distributed trust system to allow my clients to hold Bitcoin, I can tell people very legitimately, like, this is a step up from just holding an ETF for all the properties that it gives you. And then I can monetize around that. I can charge AUM fees directly for the service of actually holding real Bitcoin that we can verify, and everything you can do with actually holding that Bitcoin. And I think like that's a natural way that these massive platforms that otherwise don't really profit at all from their clients holding Bitcoin, I think that's a way that they can step in and absolutely rake in from the broader Bitcoin adoption trend. So I do think that's a logical thing to happen at some point.
Yeah, fair enough. I don't know what my answers to that question would be. No, I got to think about it a little bit more. But I mean, I think that product's going to exist. And it's going to come from different directions. It'll come from the existing juggernauts from a top-down approach and acquisition and whatnot. And we're already seeing the early signs of it from a bunch of startups in the Bitcoin space, and they'll probably like coalesce. I see a question here from Chief White. If we know of any companies that offer vacation pay and bank sick pay to be saved in sats, preferably paid out in sats. No, I mean, you could call in sick and work a second job and stack sats with it. That's probably not the answer you're looking for. I mean, that's interesting. I think we'll see. One of the interesting things that Bitcoiners talked about in the early days was this idea that if you had all of these ideologically freedom-focused people all generating wealth because of Bitcoin's price appreciation, that they would have knock-on effects and change the world. I think we're seeing the early signs of that with the growing Bitcoin industry, specifically the Bitcoin-only industry that's focused purely on Bitcoin rather than greater crypto. But we're also seeing that in small businesses around the world. I'll bring up the dental office again. Random dentist. He's a Bitcoiner. He's got 4 employees, 5 employees, something like that. I don't know what a dentist office has. And he's a Bitcoiner, and maybe he offers incentives to his staff. I could totally see that. Offer incentives to your staff. You don't call in sick, I'll send you sats. I think we're going to start to see those different knock-on effects. I think we see it on a protocol level with stuff like Nostr. Like Nostr was seeded by Bitcoiners that had at least some savings that they were willing to try and tackle a problem as large as trust minimized communication, social, and identity. So, I mean, I think we'll see more of that. So I would keep your head up in terms of that regard. But smaller businesses more likely, right? Because smaller businesses, they can adapt. It just matters who's running it. If you have a big HR department, Bitcoin is probably not going to be incorporated anytime soon. And I see Gary asking about local custodians providing custodial or collaborative custody for people in your local vicinity. I think that's great. I see some people calling it the Uncle Jim model. As the person that I believe coined the Uncle Jim model, I want to be clear that it was never supposed to be a custodian. You're supposed to like be running their node for them, and they were still supposed to hold their own keys. But I think it's a great model. I think it makes sense as a model. I don't think it's something that can be monetized. From a liability point of view, you have issues, but also like custodianship is just not something that makes that much money. Like rumors are that some of these big holders they're paying like 5 basis points, 10 basis point, 0.05% to have someone hold their Bitcoin for them. And these are with the large regulated custodians that presumably have a moat because they're like regulatory compliant and whatnot. They have teams of lawyers. So I don't think the actual being a custodian can be that profitable. Then you have to deal with all the Bank Secrecy Act and everything like that. But that's why I think the open source stuff is super interesting. That's why I think Cashew is super interesting. Because we should empower individuals and empower community leaders to be able to make that decision for themselves. You're going to say something, John? You seem very excited about this topic.
No, I mean, I was just going to say, I don't want to take that's too spicy, but I'm not convinced that the world of 5 basis point fees for custody for big holders is like here to stay forever.
Interesting.
Just because all it takes is one hack, all it takes is one snafu with like misattributed funds somewhere for people for big holders, for whales or companies, especially with fiduciary duty, to realize that custody is not necessarily a commodity. And I think that
FTX was 3 years ago. Like FTX just happened.
But FTX is like no major U.S. publicly traded stock or large company that has a lot of power with like Washington lobbyists, for example, like meaningfully lost money on FTX. Like the people hurt by FTX could be safely, I think, cordoned off into like the system in general could like cordon off FTX victims into like the crypto native people, like crypto hedge funds, degens, whatever. You could kind of write them off. I don't necessarily know that this is coming, and I don't wish it on anyone, obviously, but it would not take much for the market to, I think, quickly realize that custody is not a commodity for those that are trying to actually store Bitcoin on like a long-term basis. And because that's the thing too, like people had assets on FTX, like by and large, were not like, trying to store massive amounts of, their wealth for like the long term for their like kids to inherit, right? Or they didn't have like a ton of like fiduciary responsibility to a massive amount of investors or something like that. So look, like I don't know what's going to happen, but I wouldn't be surprised, is all I'm saying, if in the next like
I could see
5 years, like maybe people want to pay just a little more for having more transparent, more robust kind of custody solutions.
But isn't the problem that, well, first, I mean, there's two different things here, right? There's big time custody, like regulated big time custody, and then there's like small time custody. The small time, I mean, you're not going to make,
Yeah.
I do not see a path where someone's making money being, the custodian of their high school or some shit. Or they're like, their local club. But
yeah, that's an artisanal cottage industry for sure.
Yeah. On the big time, and it's good that we should have open source tools that give individuals power and whatnot. The thing that's pushing back against that concept of fees going up is that self-custody is relatively cheap and low friction, right? Like what cost would someone have to charge Saylor before he just switched to in-house custody?
Yeah, I mean,
Right?
I think, I'm not saying, to be clear, like I'm not necessarily saying that all these companies will go to like self-custody.
Yeah.
Saylor, there is, I think there's basically no cost that would make MSTR prefer self-custody because it
Really?
becomes like, well, yeah, because they have their regulatory requirements. They have like fiduciary
Yeah. Well,
duty.
what about Coinbase? Coinbase self-custodies.
Yeah.
Imagine if Coinbase was paying someone 1% to store customer Bitcoin. That'd be ridiculous. They like built it in-house. They figured it out.
Yeah. I mean, I think that relates to the point that I was making, that you may have these massive honeypots that may or may not
Right.
be as secure as people are hoping that they are. All I'm saying is that there's a lot of vulnerability, like surface area, for something to not even be catastrophically wrong, but just and not even calling it anyone in particular, but just like when you've got like trust third parties or security holes, like when you've got massive pools of Bitcoin somewhere, and you can't really audit like what's going on under the hood in terms of custody. My point is just, it doesn't take much before companies, big holders, and maybe even regulators decide like custody is not enough of a commodity that it's something that people can just assume they can charge like 2 or 3 basis points for, and that'll be enough. Like there may be demand for something more robust. But that said, when I say something more robust, I don't mean like Saylor holding like a cold card in his desk, and then Fong Wei holding a cold card in his desk, and then they have their seed plate buried in the backyard or something. Like I mean like some sort of multi-institutional insured kind of setup that maybe has more auditability behind it, right? Like something that is institutional grade and is still like outsourced, but is more, leverages the distributed trust and programmability that Bitcoin provides, so that you don't so that you can still have like very cost efficient custody without having to just put it behind like, an opaque wall of a custodian says, here's a GUI that says, here's what your balance is. And that's, that's the end of the story, right?
Okay, but we agree that up until this point, it's been a shit business, right? Like that's why you see like the Bitcos of the world try to go to consumer buy sell, because like they're just not making any money off of it.
Yeah, I mean it's at the very least a business that only makes sense at like larger and larger scale, and then ideally you want to have value added services around that, which is also like, I mean that's also banking, right? Like just making literally just like sitting there warehousing money has never been like a wildly lucrative business. But
the banks make money by like leveraging the fuck out of our savings accounts.
Yes, exactly. That's value added services. I don't know if you knew that's what the euphemism means. No, but basically like you getting that beachhead of having custody of someone's funds, even if you don't have it directly or unilaterally, but being like a piece of their quorum or an access point for them to kind of use their Bitcoin in some way, enables the ability to sell a bunch of other stuff on top of that, right? And it may not be necessarily a super profitable business or a business that you can generate huge revenue off of per customer, but it's an incredibly sticky business, which is important. And because that enables you to have and build a relationship with customers over time, as they get wealthier and as their needs change, and you can sell on top of that.
And once they trust you and they have a good relationship with you, like there would need to be a significant reason for them to move and go somewhere else.
Yeah, exactly. Right.
I mean, we've seen that with just Bitcoin buy sell, right? Like the thesis for a while was that Bitcoin buy sell fees would go to zero. But especially post FTX, I mean, I'm personally happy to pay 0.8% or whatever to buy Bitcoin in a trusted way, where I don't think I'm going to get rugged, where I think they're like taking care of my private information well and whatnot. And clearly a lot of other people are. So it's probably similar in this situation. Okay. I don't see any other questions in the live chat. If you have one, feel free to put it in there.
Gary wants to know Gary wants to know my thoughts on hash pool, and
I was going to ask you
unfortunately,
that question.
I haven't listened to your last one.
It was literally last week.
I know, I haven't listened to it yet. And Gary also talked to me about it at the mining summit this year, a couple months ago. And I remember thinking that it seemed very cool, and then not doing any much like further digging on it thereafter. So I need to listen to your episode, Gary. I'm sorry, I don't have an answer that like would be interesting or meaningful at this point.
I think it's pretty awesome. I think it's another example of an idea that should be funded through OpenSats and not through 1031. I don't really understand. I don't see like a strong business model there.
It seems like more of a primitive, right? Like you wouldn't,
Yeah.
you could leverage it in a business, but it wouldn't be like the business.
Yeah, well, I would just say mining pools in general are also not a great business to be in.
Yeah.
So a mining pool could leverage hash pools to be a more profitable mining pool, but that's still super cutthroat, hard to compete in business. We've seen the most successful mining pools are usually vertically integrated, Foundry, integrated basically with loans, and they have some of their own hash rate. And then of course the Bitmain, the Bitmain cartel over there they're manufacturing ASICs, and they control the most hash rate in the world through all their proxy pools. So it's just a really tough business to be in. But yeah, I'm super excited about hash pools. If for some reason you're listening to this episode and you've gotten this far, you haven't listened to last week's episode with VNPRC, definitely check it out. I wanted to talk a little bit about just the current market where we're at right now. How you think about it? I know this is usually a technical show where we focus more on open source software. I don't know if you freaks have noticed. I've tried to branch out a little bit, scratch multiple itches. I'm trying to do 1 week software focused, 1 week a little bit more broad, and just do like every other week. But I'm not dumb enough not to include a live price ticker in every stream, no matter what. And I see right now we're over $105,000. How are you thinking about the current? Yeah, to what Gary said, when moon.
Well, I mean, it's funny, right? You've got this graphic up here, and we're at 105,000 and change Bitcoin price, and sats are at 3 sats a byte. And like yesterday, I checked, and we were at Mempool was showing 0 sats per byte, right? So it's an odd market right now, right? Like you haven't seen this in prior cycles where, and we're not necessarily like, we're still like, 1 or 2% off all-time highs. So it's not true like insane FOMO yet. And you're not seeing, and like you would expect from prior cycles that would then kind of flow through and then kind of hit the chain, and you'd see, fees flare up kind of in line with price. We absolutely haven't seen that at all this cycle, right? Some of that is related to, BlackRock has proven to be, the best scaling layer for Bitcoin.
Not a scaling layer.
Yes, I'm aware. But that's a piece of it, right? Like you're assuming you don't believe that it's an entirely paper Bitcoin game, which doesn't seem to be the case. You've gotten kind of.
Do you think BlackRock actually holds Bitcoin?
I think so. Yeah.
I think so too.
Yeah.
Sorry, continue.
It would be, yeah, I think it would be incredibly difficult for them to pull off because of how liquid and global and 24/7 the market is as it relative to like any other asset, relative to say gold. I think it would be much harder to pull off for any amount of time, like a paper Bitcoin scheme where you had billions of dollars like we've had flow in, and not have that, like, I don't know how you could actually sustain like the inflows they've seen without if you were not buying Bitcoin on the other side of it, because that incremental demand pressure would not be like actually going anywhere. And so you wouldn't see any kind of commensurate price move. You'd have, declines in, as a result, like there's a reflexivity component to
what do you say to
the
people that that all this money has gone to MSTR and BlackRock, but we're only at $105,000.
I think that's like a big piece of it, is that there had like, but MSTR money going to MSTR is different than money going like into IBIT. I think IBIT actually directly hits like demand for Bitcoin. MSTR much less so, because if I'm buying a share of MicroStrategy, like that's not actually like, it's supporting incremental capital that they can then go use when they hit the ATM to dilute shareholders and yeah, exactly. And go buy Bitcoin. But you've got a lot of people, a lot of money that has flowed just into that. And then also like MSTY, MSTX, MSTU, all these other vehicles. And so I think like not all of that immediately has like meaningful impact on the price. Over time, it should, assuming that MSTR doesn't blow up and they're actually doing what they say they're doing. But that's a piece of why I think we're maybe not higher right now. Should flow through over time. But anyway, all that is to say, you've got a lot of demand that is being in some way satisfied by not even like Bitcoin exposure, like directly on a custodian, even though like that's what's underneath the ETFs, but rather exposure to vehicles that then like on a batched basis have claims to underlying Bitcoin. Right. So I think that's a piece of it. It's a piece of why it feels like a weird market. We've seen like in our conversations with investors in the space and, potential investors, like it's definitely, there's a huge amount of interest and a huge amount of growth in the legitimacy of the way that big money is looking at Bitcoin. We get way less pushback than I think we did, even a year ago on why is this interesting? Why is this going to stick around? Why does this have staying power? I think there's increasing consensus that there should be some level of, exposure. But I don't know that people have really hit like the absolute kind of FOMO point in kind of, investor circles yet. Some piece of that I think is because we were talking about this earlier this morning. Like the broad market backdrop is not like that accommodative right now, right? Relative to where it was 4 years ago. When, in 2020 and 21, you could pretty much buy anything and, it would go up 10% within a month and like 50%, within a year. And everyone's equity portfolios were juiced. Bonds were doing great. Real estate was through the roof. So there was just a lot. Yeah, exactly. Yeah. Like the Fed's balance sheet is, is going the other way, at least to some degree. We're still technically in quantitative tightening. We're still technically shrinking, the overall balance sheet, and it's very different dynamic. So people are not like feeling the benefits of the wealth effect, right? They're not looking for, new places to allocate necessarily, even if they're interested in Bitcoin. And so, there's definitely I think there's a huge amount of interest in legitimacy, which is very helpful. And I think this is the best risk-adjusted setup that Bitcoin has ever seen. And I think people broadly in our conversations really get that. The question is just, when do they start to fully feel the itch and the FOMO? And, like I won't make price predictions. It's well above my pay grade. And like I said, anyone who tells you where Bitcoin is going is not really to be trusted. But I think when people come around, I don't know what the catalyst is for that, but there's literally no narrative that you could use at this point to actually make you fundamentally bearish on Bitcoin. So whenever your animal spirits kick into gear, whenever the wealth effect starts to kind of kick back into, the positive direction, whenever the Fed has to do its next round of accommodation and, pull out its next alphabet soup facility to facilitate money printing of some stripe, like there's really nothing that holds Bitcoin back at this point. Like environmental FUD, no one cares about it. Regulators are going to kill it. It's the exact opposite. Regulators are embracing it. All the, the big banks that we just discussed at the top of the show are interested in getting involved. The president loves it. The Treasury loves it. Most of the agencies are way less combative against it than they were before. Hard money assets in general seem to have like much more of a growing place in like global trade and global capital flows. And people are seeing that already with gold. and increasingly, I think that flows over to Bitcoin. We have a strategic Bitcoin reserve in the U.S., and more being discussed around the world, and some have already been implemented.
Well, do we?
We do have a strategic Bitcoin reserve. Now, whether we add to it at all is a different question.
Were they supposed to do an audit? Do we not know? I think we don't even know how much Bitcoin we have.
I think that, well, the problem is I don't know that they ever promised to make it public. And I think there are good reasons that they might not want to make it public. Either because
we have less than they thought.
We have less, or maybe we have more. But
yeah, we technically have a strategic. Sorry, I interrupted you.
No. I just you go down the list, and it's I can't tell you exactly when the floodgates open, but when the switch gets flipped, there just are no headwinds at all, like there were over the last few cycles. So I would say I think it's the best risk-adjusted setup we've ever seen. I think investors are increasingly appreciating that, both, whether it's endowments and actual institutions that we talk to, or family offices or high net worths. It's just a question of when do people feel like they really want to aggressively kind of get off the sidelines and fully get off zero. And it's tough, right? Because the market psychology is when Bitcoin's at 105, you're like, oh, well, I missed it, right? I missed the move. I can't get in now. When we dump to 85 because Trump says, I'm going to put a 4 gazillion% tariff on China, people are like, well, I can't buy that right now. It's dumping. That's, Bitcoin's so volatile. I'm in an uncertain time, and I can't just buy Bitcoin. And so everyone's going to have to oscillate through that.
Well, it was at $75K a month ago, right?
Yeah. It's wild. And everyone's going to have to oscillate through that until they finally just feel like they can't wait around anymore, and that breakpoint is going to be different for everybody.
Yes, but 76K on April 7th. How quick people forget. That's pretty crazy. That's 40 days ago. It bottomed at 76. I think that is another piece for at least larger investors that are paying attention, is that we didn't drop as low as people would have expected in that situation.
Yeah. I unfortunately I'm still on Twitter, which I know I should be shamed for, but a month ago I tweeted out
You're good.
Just four charts side by side of the way Bitcoin acted relative to the major equity indices during the COVID crash versus the way that it acted during this last kind of tariff tantrum. And if you just thumb through those charts, and I think you'll see there definitely is a difference. I'm not going to say it's a decoupling, right? That was the word that was on everyone's minds during that period. But I do think people are. It's hard if you're paying attention to markets at all to not notice that Bitcoin did not act exactly the way that you would expect during kind of a global reset like that. And so, it's you got to see everyone needs touch points, and everyone needs more and more data points like that to get comfortable at their own pace. But that's just another kind of arrow in the quiver, right? For reasons to not be bearish on Bitcoin.
Yeah, I mean, it's insane to me that people are bearish at all. It is. I'm curious on your opinion, because you did start it off with mentioning the fee rate, the on-chain fee rate, because the dashboard is powered by mempool.space, 1031 portfolio company. And we're just not the retail demand is just not there for actual Bitcoin, for real Bitcoin. Maybe retail is opening up Robinhood and buying IBIT or MSTR or one of the derivatives. But they're not here, and they're not here in Bitcoin land. They're not here buying actual Bitcoin, self-custodying actual Bitcoin. Is that just is that the new normal, or is it just still too early in this part of this cycle? If the cycle's extended, do we see that again? Are we going to see the craziness of average people coming in and buying Bitcoin and stacking?
Yeah, I mean, I think I think we will see some kind of retail FOMO mania again. But increasingly, I don't know that that's really like the main marginal driver of Bitcoin's price, right? Like, I don't know that it's like the degen on some trading on some like offshore exchange, or the guy buying in Robinhood, like just kind of aping in his life savings and in Robinhood or something. Um, it feels and looks a lot more institutional, for better or worse. So I think we'll see that, but I think that's gonna require like us getting deeper into the cycle, and probably some degree of like moving back toward monetary easing, to get animal spirits like ripping again, and to get kind of the average guy wanting to participate at to some degree. But yeah, I think it's like what's gotten us here clearly has been much more like institutional flows, than or like your broad your Charles Schwab accounts in mass, buying IBIT or something, right? It's not been your traditional like retail degen player. Maybe some of them are maybe some of those guys are now going to
You don't have to be a
MSTR.
degen. What about just the stackers? Like, what about
Well, then, but
the
I mean, yeah, but them too, right? Like, and when I say them, like it includes me, and I would assume you, like, you're like, think about Bitcoin's market cap, and think about like, your $100 DCA or whatever per week, or your $500 DCA, or whatever
Yeah,
it
well,
is.
there's
Like,
10 million people, that adds up.
yeah, I mean, I guess it's a question as to how many are like actually how many people are there out there that are DCAing in a meaningful way and also like hitting the chain.
It's probably less than 100,000.
Yeah, that may be right.
But in previous cycles, it's 10x or something. I mean,
Yeah.
there's no way to measure it. So
It
like
can
it
go- I
could
mean, it
be
can
at the
go
end of
crazy
this cycle,
quickly.
it could be
Yeah.
1 million people.
Yeah, absolutely. And the tools are getting better for that, right? And we see that in like our, some portfolio companies that we have, like the tools to like actually take custody of Bitcoin, and whether you want to store it, single sig, or do it kind of collaborative custody or something like that. Like that's all getting better and easier, and generally that's kind of been like up and to the right for all those businesses. But yeah, just as it relates to like on the margin, like you have to add a lot more stackers every cycle who are doing it in a dedicated way to move the market to the same degree, as the prior cycle, right? As the market cap gets bigger. So
Yeah,
like
of course.
that's a piece of it too.
I don't know. That'll be interesting to watch. I think it might just be I'm like coming to the conclusion, or not the conclusion, but my working thesis right now is that the Treasury companies, and even to a lesser extent the ETFs, primarily IBIT, have delayed and extended the cycle because you buy MSTR, it's going to take about a month for that to show up in real demand for Bitcoin, buying Bitcoin or whatever. Like he's got to delete. Even if you buy IBIT, it's going to take like 4 or 5 days for them to like settle it out and like make it happen. Like they don't do it instantly. They're like, they have to go through whatever traditional flows to make it happen. Like you buy on strike and like, boom, done. You got it. It's like 10 minutes. So it slows it down and extends it. But then the other question to me that and then historically, I believe the best months for Bitcoin price appreciation wise is usually in like the fall. So we're like gearing up for like a FOMO crazy fall winter. But at the same time, I do ask myself, historically at this point in a cycle, you would see maybe people speculating on shitcoins. The shitcoin market is non-existent. It seems like it's just fallen out from underneath itself. Even like the most diehard shitcoiners now have brought down their portfolios to like one shitcoin. They're like, oh, but this one's not a shitcoin.
The quality shitcoins.
Yeah, they're like, oh, I should just have like 1% of my portfolio in Solana, but the rest in Bitcoin. Like I heard from like one of my shitcoiner buddies. And with the shitcoins, though, it was a very easy thing for like Solana pumps. You're already self-custodying Solana, and then you go to one of these swap services and you move it into Bitcoin, which you self-custody. That flow doesn't exist for like holding MSTR. Like you buy MSTR in Schwab, how far away are you from going to stacking self-custody? You're pretty far away from stacking self-custody Bitcoin. I don't know how that flow works. How does that transition work? And so maybe that takes significantly longer. Maybe eventually that happens anyway. Probably. But still, it's definitely complete. It's definitely same but different from previous cycles. It feels like.
Yeah.
Okay. Well, we'll keep an eye on it, John. I think we'll make this like every 6 months or something. We'll have you come back on.
Okay, great. You can do your obligatory 2 suit episodes a year, and we can give the freaks the updates that I'm sure they were all craving.
Dude, people seem to freaks. It seems like you've at least the ride or dies in the live chat have seemed to enjoy it. We'll see how people feel on the podcast apps. John, before we wrap, final thoughts.
Final thoughts. I will not. It doesn't really matter what I think. It doesn't really matter what anyone individually thinks, and that's the beauty of emergent decentralized systems such as Bitcoin and also such as language. But I won't die on many hills, but I will die on the hill of Sats. The bits conversation to me is just completely illogical. I get what people are going for, but anything that injects incremental, like at this point in the game, confusion on units is probably not going to have the result that I think people are looking for. And more importantly, 21 million hits, 2.1 quadrillion does not. 21 million sounds like a small number. People know what that means.
Wait, you're mixing up two different things, right? There's some people that want to call Sats the smallest unit of Bitcoin.
Yes. But in
that
that case,
was the 21 million.
Yes. Yeah. So you're right. Sats, bits, and Bitcoin calling like each.
We could just change the name of Sats,
but
we could change the name of Sats to bits.
I see them as interrelated because it's a lot of the same parties like trying to get these different things. But yes, so like the Sats bits thing, like I think is pretty self-evidently just like not going to happen. But the calling each Satoshi a Bitcoin, I think distracts from or does not take into account one of the key shelling points and like mimetic powers of Bitcoin, which is 21 million. People don't understand how to conceptualize a quadrillion, so we're never going to walk around telling people there'll only be 2.1 quadrillion Bitcoin and have them think like, oh, well, there aren't that many. I better get some. And it is important to give people that shelling point that they can latch onto to understand just how scarce Bitcoin is.
Yeah, no, I think it doesn't make any sense to me to confuse users, but like people know what a Bitcoin is, right? There's 21 million. Like that makes no sense to me. That said, if you run, if you maintain an app or wallet and you want to do that, by all means do that. See how it plays. You're your own person. I will say like, I can disagree with him and I can disagree with John Carvalho in this regard. He's the author of BIP 177, which proposes this. But at least he did it in his wallet. Like he just changed it in his BitKit wallet. Like that's how it's displayed. So anyone can do that, see how it plays out. There's no like king or like legislative body of Bitcoin that can decide how to do that. I don't think it's something that should really debate is unproductive really on this front. Language is mostly organic and people should decide what to do. But to me, the idea of like calling the smallest unit Bitcoin is just super confusing. It adds more confusion than it presumably benefits. But I don't necessarily agree with that about the whole bits argument. Now there's two pieces on the bit side, right? Which is We could use 1 bit right now is 100 sats. That's always been the case in accepted language, in the organic cultural language. 1 bit is 100 sats. So we could have bits and sats. And then there's another contingent that wants to convert sats to just call sats bits, which then I don't know what we would do with the unit that is currently referred to as the unit formerly known as bits.
I just think adding, I just think adding any new element to the taxonomy right now at this point is just like, it's not helpful. I don't know who's really asking for it. Like, I think people can try. I think it's easiest for people to track 1 Bitcoin and 100 million sats, and it's like, it's just like I don't really know what having a bit adds to the conversation. I guess you could say like, dollars like can get subdivided up into like pennies and then dimes.
Yeah, but they're not called dolls.
Yeah, right, exactly.
Yeah.
But so yeah, on just the bits versus sats, like, should we add bits to the taxonomy? To me, that's like, I don't really care that much about that. But I don't really know who's asking for it at the same time. So it's not something that I really want to see happen just from that perspective. But the call each sat, just call them all Bitcoins. To me, like, that's definitively in the wrong direction, and I can't control it. And you're right, like, language is emergent and organic, but I just hope it doesn't go in that direction, because
I don't think it will.
We have to preserve 21 million as a mimetic shelling point.
I think that's the least likely. The most likely scenario is it just stays as it is.
Yeah.
That's what the momentum is. The least likely is that sats start getting referred to Bitcoin and catches on. Sats are Bitcoin. They're little bits of Bitcoin. Then maybe the second most likely, after just sats just staying Lindy, is we rename them to bits. No, probably not. The second most likely is that some wallets denominated in bits, which is 100 sats. I personally, when I was championing sats, to be clear, I wasn't necessarily championing the name. The name already existed. Like, someone else came up with the name. Satoshi didn't come up with the name. That was after Satoshi. I was just championing the idea of thinking in the smallest unit possible. And that was sats. And I think that's important, right? Because people think they're late to Bitcoin. They think it's too expensive for them. And we were getting a lot of pushback from like XRP people, Ripple people, who were saying Ripple the standard, XRP the standard, XRP so it's cheap. Well, XRP is more expensive than sats, right? And Lightning Network happened at the same time. I do think it's hilarious that even today, while people argue about it on X, they're like, oh, Evil Odell made sats the standard, like blah, blah. It's like, I deleted my fucking X account. Like, you guys can argue all day, all long. Do whatever the hell you want to do. I'm thinking in sats. Noster's using sats. I think it's the standard unit of value. It is what it is. But change your apps. If you want to change your apps, if Dorsey wants to change all sats and Cash App to Bitcoin, then he's welcome to do that, and see how it works out. Like, users will either like it or they hate it.
Sounds good. We solved it.
I can't believe that was your final thought. I thought we could just avoid the whole topic.
I feel like it was important for me to draw a line in the sand on our shelling point.
Yeah, I mean, I don't really. Fair enough. Well, it's something that I sleep well at night. Like, I just don't really care.
Yeah, that's really the right.
I don't think it's a real concern. I think you said it earlier. I think what we see in our day-to-day with calls with people, particularly like large potential investors and smaller investors too, right? We have 2 funds. We have an institutional fund, and then we have a smaller one for like medium, high net worth individuals. And it's a weird lack of urgency. And I would just say, like, I feel like all this stuff is just distracting a ton of people, when really in your head, you should just be like, fuck, I don't have enough Bitcoin. I need to have more Bitcoin. I need to have a deliberate strategy here. Like, I need to be focused on this thing, because we're born in this one period. We were blessed to be born in this period where Bitcoin gets adopted during our like the primes of our lives, where we're most focused and most productive and most working. Massive opportunity. And instead, there's just people flaming each other on social media. It's just a distraction. And I just would implore people to try and stay focused, and stay humble, and stack sats.
Good way to end.
John, thanks for joining. Always a pleasure. We'll do this again. Freaks, you can find him at primal.net/John. What's your X handle?
John Arnold 1031.
X.com/John Arnold 1031. And obviously, all the information on 1031 is at 1031.xyz. Freaks, thank you for supporting the show. Thank you for joining us if you were in the live chat. There'll be a dispatch next week. I'm not going to Vegas. I don't know who with. I haven't figured that much out yet, but I'll make it happen, and you can just find out on Nostr if you want to join the live show. Anyway, love you all. Thanks, John. Peace.